Hi, my name is Steve Dotterer, and I am a Senior Manager at H2R CPA. As a Certified Valuation Analyst and the holder of a JD from Pitt Law and an MBA from the Tepper School of Business, I perform business valuations and help individuals and their family law attorneys navigate the financial complexities that couples face when they are getting divorced. Almost every divorce has some financial component. This may include valuing non-marital and marital assets or determining a spouse's net disposable income. This enables us to calculate child support, spousal support, and alimony. There may also be a closely held business, stock options, or a pension that needs to be valued as well. As part of the divorce process, assets and liabilities are divided between a husband and wife through a process called equitable distribution. Each asset has to be assigned a dollar value. In Pennsylvania, assets are divided based on fair market value. This term is defined in statutes and in case law. Some assets are easy to value, like your checking account. Others, like the ownership of a closely held business, may be more complicated. When a divorcing party does own an interest in a closely held business, typically a business valuation is required to determine the value of the asset for equitable distribution. Often, the divorcing couple may disagree over the value of the business or have no idea how much the business may be worth. In these situations, a qualified business appraiser is needed to provide your attorney or the court with an expert opinion of business value. Now, while the theory involved in the business valuation process is typically similar for divorce and non-divorce settings, there are some nuances for divorce-related valuations that need to be considered. One of the first questions we have to answer is, when was the business started? Was it before the date of marriage, during the marriage, or after the date of separation? Was the business purchased or was it acquired through inheritance or a series of gifts? These questions are important because not all of the business interest may be included and may not be subject to equitable distribution. Another concept important to divorce valuation is the determination of personal goodwill compared to business or enterprise goodwill. In Pennsylvania, personal goodwill is not considered to be a marital asset subject to equitable distribution. Although not all businesses have goodwill, if goodwill does exist, we need to determine what portion, if any, is personal in nature. In Pennsylvania, selling expenses and tax ramifications also need to be considered when valuing a marital asset. Typically, the net amount, or what's left after selling expenses and taxes, is the dollar amount that needs to be considered for equitable distribution. To a couple going through divorce, the world of business valuation is confusing. However, with the help of a good attorney and a trusted business valuation professional, the divorce process can become less intimidating. If you have questions as to whether you have a need for a valuation and litigation support professional, or if you need the name of a divorce or family law attorney, please give me a call at 412-391-2920 or email me at the address provided below. Thank you, stay safe, and I look forward to speaking with you.